Hi, everybody. This is Sean Heidemann, designated broker with Position Realty. Today, I'm recording my Phoenix market report for the month of May 2022. As you can see from the video, it's a little different. You can see my face on there. I figured out how to add video to the screen screenshots. So going forward, you're going to start seeing my face here on the videos. This report is going to be a little bit different. There's some information that I wanted to go over with you. Make sure that you're aware of these dynamics that are going on in the overall macro economy, not just in Phoenix. As everybody knows, that inflation has been really high, as you see it at the grocery stores and gas stations. Inflation is currently right around 8%. I've had this chart here. It shows between 1980 and 2022. As you can see, back in 1980, inflation was really high. It was all the way up to 15%. And what the federal government did to slow the inflation down is they increased the federal funds rate, which is similar to what they're doing now. And as you can see, back in the 1980s, as the federal funds rate went up, so did also mortgage rates, which is currently what's going on right now. Back in 1980, in order for somebody that owned a home they wanted to sell, they had to sell or finance and offer the buyer a lower interest rate because most people could not afford these interest rates. So we are starting to see the same history repeat itself. Another thing that's going on in the market is the market investor share. During the real estate boom, as everybody knows, investors bought up a bunch of properties and they put it all on the market at the same time. Since COVID, investors entered the market. They were all the way up to about 31%, and they're currently starting to pull out. Now, this is fourth quarter of 2021, so this is probably a lot lower. So this information from Redfin is a little delayed. But if investors put their houses on the market all at the same time, then we're going to start seeing prices drop. Some more information. BlackRock, they keep track of all the foreclosure data nationwide. There's a shadow inventory of homes. There are number of properties that are 90 days or more past due, 640, and 30 days or more is approximately 1.5 million. This is nationwide, so foreclosures may or may not affect our market as much, but I just wanted to share this information with you. So let's get started with the Phoenix specific information. The number of new listings increased from 10,095 listings in April to 12,101 listings in May, or an increase of 19.9%. Since March 2021, the number of new listings has hovered around 10,000 to 11,000 new listings. New listings in May is outside this trend, which shows we may start to see more and more homes for sale. Since the number of new listings increased, the number of active listings also increased by 16.6% in May, with 11,770 active listings in April to 13,724 active listings in May. Currently, the number of foreclosures is 33 listings, or 0.24% of the total active listings on the market, and we had 20 new foreclosure listings come on the market in May. In May, there were 5 short sale listings, which is 0.04% of the overall market. The number of sold transactions, right here in red, as you can see, decreased by 6.2% in May, from 9,296 transactions in April to 8,716 transactions in May. The market continues to be a seller's market due to the low inventory of homes for sale, but higher interest rates is making it more difficult for buyers to purchase and could bring down market values with an increasing number of homes for sale. The average days on market started a downtrend since February 2019 at 72 days on market, and it's consistently been in a downtrend to the current days on market in May at 26 days on market. Overall, the last 2 years, the average days on market increased during the holiday months, but decreased during the summer months. This is indicative of a market that remains to be competitive. The Phoenix housing market ended 2021 exceeding the national average with an overall annual appreciation rate of approximately 19.6%, from 443,000 to 530,000. Since the beginning of the year, the average sold price continued to increase, and we're currently at approximately 592,000, or an 8.7% increase since the beginning of the year. But in May, sellers are starting to decrease their asking price by on average about 30,000. As you can see, they started since February decreasing their price in order to get rid of their houses. So now they're starting to drop a lot quicker. The original sale to list price decreased in May to 101.9%, or accepted price of 1.9% above the original asking price. The average sale to current list price increased to 101.9%, or an accepted price of 1.9% above the current asking price. This means buyers are still offering a purchase price over asking price. Since January 2019, the months of inventory has hovered around 1.5 months on market, where it's fluctuated slightly, with the lowest at 0.9 and the highest at 2.31 months. In May, the months of inventory increased to 1.57 months from 1.27 months in April. Since the number of active listings increased, the months of inventory also increased. Overall, the Phoenix real estate market remains competitive, but the market is starting to change with less buyers in the market and increasing inventory of homes. If you own a home and are thinking about selling, now is the best time to put your home on the market before the market changes. When the number of homes increase, we may see prices decrease, or it will be more difficult to get your desired price. I can provide you with a free detailed market valuation report for your home or investment property. If you are planning to purchase a new home, I don't recommend buying if you are not planning to live in the home long term. Please feel free to call me if you have any questions or concerns if you should buy or sell in this coming year. Thank you for watching my report.